What in the world is going on? We got metals tanking, crypto is flat, but yet the S&P surged to all-time highs. What is really going on? Clearly, this isn't regular market activity, so expect more manipulation and more can kicking. Let's talk about this. All right, so I want to take a minute, share some thoughts in reference to just activity after market activity. Just to share my 2 cents and see what's really going on out here. So as I watched the markets throughout the day, didn't really have much of an opinion directly, just because I'm like, clearly nothing makes sense at this current moment. But then again, it's always a good opportunity when you see true tried and tested metals taking a dive to be able to look for opportunities. While we know what's at stake here, we're witnessing the greatest monetary restructuring in human history, because we're witnessing the end of the debt-based structure and the introduction of a new technologically advanced digitization of everything that we consider to be real. And there's going to be a lot of turbulence. And so basically, I want to just share some chart activity, share a couple headlines, as of course, check into the social media sphere to share just some sentiment in general as to what's going on here, and let you guys just do what you got to do with this information here. But ultimately, as I always say, in the midst of a reset, expect nothing to make sense and everything to appear to be one way, while all along it's all one big facade. But let's just jump right into the headline. So as of right now, I'm doing this in the evening, and based upon the price activity, literally, I watched it this morning, and even in watching the markets open up late in the evening last night, which was the Asian markets or whatnot, I saw a surge up and then a immediate drop down. And when I saw that in the evening, I knew that Monday morning was going to be interesting. And so as you can see right here, this is what we're looking at right now. I'm sorry, I'm about to say 4,000 gold, but literally it is currently under $4,000, which in of itself says a lot, because we know that no one in their right mind is actually selling physical silver or gold. And so clearly this is a coordinated attempt by, I would assume, you got the bullion banks in cahoots with probably global governments to try to do anything they can to make sure that this price here doesn't continue to climb to all-time new highs. And so literally, I look at this type of activity here as a temporary pause for the sake of buying time for the powers that be and what they're trying to accomplish. And then, of course, everything that this entire economic facade is centered upon is geared towards the stock market. And so to have the all-time high in the S&P 500 as well as the under indexes lets us know how serious this manipulation is, because when you see $118 drop within a trading day, and then of course you see $2 drop, give or take, but yet a continual decline from the previous week's all-time high of close to $54, we're literally down $8 or so when it comes to silver. And so how serious this must be. But then again, I really did anticipate to see cryptos do a much bigger bid than what we see here. And so literally, as I just zoom into the numero unos, and so of course everything is centered around Bitcoin. So as you can see on the screen here, let me move myself out the way. Even Bitcoin, outside of just early morning activity itself, it got up to 116,000, and this was earlier this morning about 3:16 a.m. On the 27th, and of course throughout the day, bit by bit sold off, and then it got up to 115 around 2:16 today, and then as of right now it's 114,000. So not much of a bid there. So it, for the most part, has remained flat. So if I just zoom out a little bit, from a week ago when it was at 107, got up to this 115. So all in of itself, nothing major there, given that Bitcoin is at $114,000 right now. So clearly, I consider that to be more flat than anything else. And of course, wherever Bitcoin goes, you'll see all the other altcoins in the same ballpark. So ultimately, it's flat. Then we got XRP is more relatively flat. Then you got Solana, which is ultimately flat. So it just goes on and on and on. But then again, where it matters most, I guess, for this economic narrative that they want to frame, happens to be centered around the S&P 500, and to be more precise, it happens to be surrounded around the Magnificent Seven, because the Magnificent Seven, as you can see on the screen here, drives the entire equities market, and everything else around it is just going along for the ride. And of course, that all of a sudden Monday morning, off the rumor or the thought of there being some type of trade deal or trade agreement or trade something or another between this whole tariff war is supposed to drive all this. Come on now. I know that you know better than that. And so let's just get into some headlines real quick, and then we'll try to make sense of it. But give it to you straight here. This is something that came out after market. So it says S&P market today. S&P crosses 6,800 mark. Dow joining the Dow, Nasdaq, and fresh records as the U.S.-China trade deal hopes run high. So once again, off the sheer hopes of there being a deal. And clearly at this point, we know that this tariff, taxation, global unraveling is not centered around actually being able to accomplish a agreement that will make all parties involved happy. It's not mathematically possible, especially when you got a government that runs deficits, unbelievable deficits at that. And then you look at the current debt structure of 38 trillion, and this isn't stopping. And so if you look at the actual deficit, it says federal deficit budget deficit $1.7 trillion and climbing. And because of this, there will be no way of appeasing any of our so-called creditors or trading partners when we're sending debt IOU nothings and they're sending real goods. So that's how I know that this tariff situation will not work out good for us, especially given that our entire world is centered around this instrument right here. And as the world chooses to opt out of accepting these only, that lets us know that we're kind of like, up a creek without a paddle, because this is all we know. Debt instruments is what we export around the world. And that's why, regardless of what you're seeing in price activity, stick to what you know. Gold and silver will definitely continue to do its thing. And so once again, any type of price dip, look at it as an opportunity, because we can guarantee one thing: there will be more can kicking and more false narratives to try to get people distracted from what's really matters most. So let's just jump into this article, this headline real quick, filter through it, try to make sense of it, and go from there. But it says here, the Dow Jones says U.S. stocks climb to fresh Monday's highs amid promising signs that the U.S.-China trade deal will cap President Trump's long-awaited meeting with the Chinese President Xi Jinping later this week. So off the sheer mention of there being a promising sign of agreement, we got market activity of this nature. So the Dow Jones moved roughly 0.7% higher, over 300 points, while S&P jumped over 1.2% to close to 6,800 for the first time. It says tech-heavy Nasdaq composite led gains of 1.9% to the all-time notch, a fresh record high. And as you can see here, we went over this last several weeks of it being completely inverted, or inverse rather, where gold and silver actually determining the true state of the global economy, and now all of a sudden it's been a complete removal away from that, as we witnessed gold and silver being slammed, substantially. And then of course we got all-time highs in stocks, and we've already talked about this before, but who actually is buying stocks at this current moment at these such high valuations? Yeah, the average Joe and Jane out there who actually are not actively investing, more of the index funds, individuals, they're not putting any funds aside to actually buy any of this overly priced stock market. So clearly it's a lot of funny business going on behind the scenes with a lot of, I would say, AI tech manipulation of, you got OpenAI buying from Nvidia, and Nvidia, buying up this company and then buying this company and then sponsoring this company. So all this back deal dash door crap, it's enough to just make you wonder, like, at what point can they run out of tricks up their sleeve to keep people deceived and thinking that everything is centered around, our debt markets as well as the stock market? We're going to find out for sure. But just give you a little bit more here, and then we'll get into some other headlines from commentary around the internet. And so it says that Wall Street is in an upbeat mood as it starts a pivotal week featuring the Federal Reserve interest rate decision and a barrage of big tech earnings, as well as Thursday's high-stakes meeting between Trump and Xi. And so literally, my suspicion would be, heading into the Trump and Xi meeting, supposedly, everything's going to also be centered around the Federal Reserve, whether or not, there's going to be an interest rate decision or not. More than likely, it probably will be. But then again, I would assume that this meeting may not go through as planned. And so as a way of including this meeting this week, I believe this meeting was set up deliberately at this particular time, which means that the whole idea of there being an extra increase in tariffs, what was that, 2 weeks ago or so, was probably for this exact moment in time. And what do I mean? We know that this current administration is hard pressed on the narrative, making sure that everything is hunky-dory, so that everything behind the scenes, which matters most in reference to this, the reshuffling of the deck and the building out of the alternative system that the U.S. is going to be implementing at some point as well, is all centered around who controls the narratives. And so literally, every time he texts or tweet, every time something comes out from the mainstream narrative, it's always for a purpose. Nothing is accidental at this current moment. And so literally that 2 weeks ago, when he talked about 100% or adding 100% tariffs on China, if they don't do this, the market's tank, gold and silver continue to surge. S&P did a little dip, and everybody's like, oh man, are we really in a recession now? And so all of a sudden now, they happen to schedule a Xi and Trump meeting the same week that Jerome Powell is set to announce whether he's going to pivot or not, even more. And so once again, if he doesn't, as far as making an additional quarter point cut or not, you better believe come Thursday, it's going to be a different narrative. And so I believe this Trump and Xi meeting on Thursday was put in place at this current moment in time as a narrative controller based upon what comes out from Wednesday's meeting. And so just run some scenarios by you. So if Wednesday, Jerome Powell cuts, the markets will continue to go up. And then it'll make it easier for them to actually come to a stalemate. Because once again, come Thursday, if they do meet or if there are some talks, it's not going to be anything favorable for anyone. Because no matter what, China's not going to budge and the U.S. is not going to budge, because that's just how this narrative goes. And so the biggest distraction is the fact that people actually think that there's going to be some positive results out of a Trump meeting of any kind. There's not going to be a great deal that brings things back into balance in the international trade scene. It's not possible. Once again, why? Because the world is tired of collecting these things here. And so once again, come Thursday, if there's a cut, then we can see some more narratives to counterbalance that. So if the market surges on Wednesday, if come Thursday there's nothing favorable for the headlines to put out there, you better believe it's going to be a slight cooling off, or he can tweet and say something like he's done before, because all of these things are just repeats of previous things. So he's been doing this now. We've been his second administration now, almost 10 months, give or take. And he's just using different narratives and different talking points to create headline buzz that controls market sentiment. And so literally I can see a cut tomorrow or cut on Wednesday, and then Thursday, depending on that response, if it's high enough, he can then come out with some type of favorable tweet. Great discussion today. We really solved a lot. It looks like they're going to be, giving us what we demand. Market's going to surge even more. But if Jerome Powell doesn't decide to cut and it stays the same, he's going to come out with something even more bullish, like, China don't want to see us. They're bowing down. They're giving us what we want. And then, so no matter what, this meeting was set up for the sole purpose of helping steer the overall economic conditions, which ultimately kicks the can down the road more, because it's all about keeping these bubbles hyperinflated while we having banking issues, subprime lending issues, commercial real estate issues, you name your set of issues that you might be familiar with. And it's all propped up by the fact that this administration needs a positive narrative no matter what. And of course, if things get too bad, you know what they're going to do. They're going to blame the previous administration and say, it was already a problem because, Joe Biden did it. And so, yeah. But so I say all that just to say, never pay attention to what we're witnessing in real time, because it's all being orchestrated and manipulated intentionally to distract us, to cause emotional stir amongst the people so people can react irrationally towards the things that are happening around them. And that's why gold and silver, whenever you see price dips such as this, whenever you see price decline continuously, that lets you know what they're afraid of. It's the kryptonite to the entire banking structure / debt-based Ponzi scheme nature of an economy that we live in. And so if you can get it at a cheaper dollar amount, actual physical in your possession, then go ahead and do that. Okay, so let's just jump right into some sentiment on X, because I think a lot of people share their thoughts, and it's definitely worth getting some commentation on this. So here is, let me just gear this to you right here. So here's something I came across I thought was interesting. Don't know the individual, but it looks like he's dropping some nuggets, and I think it's definitely worth touching on. But this is obviously from an interview of some kind on Kitco. It says, here we have Robert Gatlib, explaining how your SLV ETF is used to short silver. And so he said, always buy PSLV or CEF unless you want to facilitate the continued suppression of silver. And says, yes, buy physical first, but if you have a Roth or IRA, you should buy Sprott funds for metals in them. So his claim is that the SLV ETF, which is where a lot of investors who might be new to the game right now are getting involved in, because they're using their 401ks as well as their retirement vehicles to actually buy physical silver within the SLV ETF, supposedly, but it's more so a claim to the silver rather than the actual physical. And so literally with the demand in the ETFs for silver, it's easier as that price actually goes up. It's easier for them on the back end to be able to maneuver and manipulate some things by so-called having possession of real physical silver, but it not really being there. And the silver that might be associated with those ETFs or that SLV ETF. They might be using that to actually supply the bullion banks in the short term, which allows them to take that physical somehow and dump it along with some of those contracts that they're creating. So you still got settling of those contracts from the paper to the physical globally. Asia's already setting the pace for it. I talked about how India is changing the game with offering collateralized loans on gold and silver at the 10-to-1 ratio. So clearly the demand for silver and gold hasn't changed. So the only thing you have to wonder is, why is the spot price dropping? So that lets you know the increased intensity on the manipulation when it comes to the futures game. And it looks like, according to that person there, they're using the SLV perhaps. So that's just something to consider, my good people. It's always good to try to find some narratives as to why things are what they are. And so here's just a little bar chart here. It says silver enters technical correction after falling 13% from its October 17th all-time high. And then we have Chris Marcus from Arcadia Economics says, if you're wondering why the gold and silver price are getting slaughtered today and the big change that just happened in the London silver crisis, this will help. Then he goes on to give a full cap. Let's just jump in this real quick. And then goes on to the Substack. Let's just go and see what we can get here. And so it gives more details here, but I probably won't read it all just because it's kind of long. But just pointing it to you if you guys want to go get more of this for yourself. But one thing I did mention before is the silver lease rates, how it surged. What was that, about a week ago? Indicating how much pressure was on those that tried to short silver, and then having to go into buying it up or leasing it up. The rates to actually get silver went that much higher. And then what he's saying here says silver lease rates, let me go it out of the way, silver lease rates ease from historic spikes. So clearly he's indicating that this particular drawdown on the lease rates was a part of this whole strategically calculated, it looks like, slaughtering when it comes to silver in particular. And it's good to say there's something of that same magnitude happening in the gold space that allow both of them to be drawn down. So anyways, this is just something that's happening here. More charts, more graphs there if you guys want to dive even deeper into it. But ultimately, at the end of the day, manipulation is your friend. So take advantage of any opportunity you have to be able to get physical silver when you can and how you can, because once all the shenanigans are over, with all the games are being played, with all the manipulation is coming to a halt, and it's even that much harder to try to manipulate prices, because there's one thing between the spot price, which is being set by the futures, the actual get in your physical hand today silver price. That's always gonna be different. So just something to keep in mind for my people. And as always, for those who want to get physical and things that is affordable, this is where it's an opportunity for you to do such. So on the screen here, as you can see, we have gold backs, the cheapest, most affordable way to get physical 24 karat gold in your possession. If you want it, go to buygoldnotes.com, links in the description. Check it out, get yourself some. And also, for those who want to get involved with silver, this is the opportunity that I want to continue to remind people of. So for those who have been participating, more props to you. Getting involved in silver directly will be a good way of hedging and diversify and getting ahead of the trend, because more people are going to get in silver. So these individuals here, they're allocating monthly allowance to getting their silver. So if you're interested in actually becoming a distributor yourself, or just to set up a monthly automated delivery to wherever you choose to have it sent, then feel free to visit the link in the description, mysilverteam.com. We'd love to work with you directly and help you get yourself set up to where you don't have to worry about the price, just worry about possession. It comes to you any day, rain, sleet, or shine, it comes. So anyway, just sharing my 2 cents. Curious what you guys think. If you found value, hit that thumbs up. And other than that, look forward to speaking to you in the future. Peace.